Mayuresh, we'll have the cues coming in from the Fed later this week itself. But your take in terms of the index, and particularly I wanted to ask you about a couple of stocks like Oro Pharma. That one's seen a sharp correction. They've done the right thing, I think so, from a market's perspective of calling off that transaction. Stock at around 10, 11 times odd. Bad news out of the way. Will you look to chip in?
So afternoon, Nigel. So I was listening carefully to what Prashant was elucidating at this point of time. And it's absolutely right. I think what probably happens in the Fed meeting and what decisions probably come through in the next few weeks in terms of the balance sheet unwinding, because it's a pretty large unwinding in a systematic manner that central banks across will have to do. European bankers, US bankers, and the Japanese bankers as well. So I think that is probably creating jitteriness in the market. The global markets, Nigel, have already shown inherent signs in terms of a distribution pattern. Under the guise of the Nifty, which is holding up, I think the broader markets are definitely under pressure. Having said that, my own sense is that for a stock like Oro, as you rightly mentioned, I think the calling off of their Cronus Pharma deal, I think has been sentimentally positive. But what has been seen in the numbers itself is that it was a very, very soft performance. Specifically, I think the US sales, which contribute almost 50-odd%, pricing pressure is clearly getting played out. So I think the US revenues declined almost 7.5-odd%. On top of that, the injectable sales declined 9%, which means that there were far fewer elective surgeries. With cases going up in the US markets, some amount of scare in the European markets, the injectable sales, even for the second quarter with rising cases and elective surgeries getting opted out, might still be on the table. What happens in terms of US FDA observations for its plant also is very, very critical. So yes, I think there is softness in terms of numbers, sentimentally good news of calling the transaction off. But I think the next couple of quarters will do the re-rating in terms of the EPS numbers for Aurobindo. It looks a little bit tough, so I think I'll wait and watch for Aurobindo Pharma, Nigel, at this point of time.
Welcome back. The market's got just about 40 points, so it's given up some of those gains in the last 10-15 minutes or so. Mayuresh Joshi is still with us. Mayuresh, two quick comments. One on Zomato. Do you think it makes sense to use this opportunity to buy? This is today the lock-in for anchor investors ended, so maybe there is some selling there. It's at 126, 127. And the second one is Cadila. It's been selling off for 2 months. I mean, it used to trade at 30 times earnings, but with the sell-off, it's now available at about 23, 22 times earnings. Your thoughts on both these?
So afternoon, Prashant. So I think consumer tech platform, Zomato, I think expected to do well, right? That's the word, expected. So the next few years, how the aggregator probably shores up its revenues and specifically its bottom line is going to be extremely critical. Now at O'Neill, Prashant, we've got a pattern called as the IPO base building pattern. And this clearly defines how a recently listed IPO stock might react in terms of the recently reported financials and expected EPS numbers as well. So with that pattern in perspective, our own sense is that anywhere between 7 days to 5 to 6 odd weeks, and it should actually take out its opening price on the pattern formation itself. So let's wait for a week or so, I think, for this pattern to develop. It definitely takes out 145. There might be some technical momentum that can get associated with the stock, though the fundamentals will take time to recover. When it comes to Cadila, specifically in terms of US sales, it's almost 43-odd%, what you've probably seen in terms of the new launch, the vaccination for kids between 12 and 18. That probably becomes a trigger point. But the base business, Prashant, still remains very, very weak. So the expected revenue growth, the ANDA filings almost 90-95 pending, expected to get 10 to 15 approvals this year as well. And a large portion in terms of how they're able to maintain their EBITDA margins. Along with the resolutions of Moraiya, I think that is again becoming a back burner for Cadila at this point of time. So I think balance sheet deleveraging from net debt equity levels of 0.4, 0.5, whether they can become cash rich in the next few quarters. And these pending issues will probably still be at the forefront for Cadila. So I'll bide my time, as I said, even for Cadila. I think anybody holding, I think, can probably hold on, but it definitely needs to gain nice strength based on any of these attributes turning positive in the next couple of quarters.
Okay. Just very briefly, and I put this earlier to Sanjeev, Mayuresh, any thoughts on what's happening with Dixon here?
So no idea, but again, I think the entire PLI scheme that was announced a few months back, I think clear beneficiary is expected to be Dixon. Again, the expectation in terms of their own design manufacturing, the ODM part, will definitely shore up their margins going forward. Reasonable amount of order book across segments that Dixon has got at this point of time. They've added quite a few number of clienteles across business segments. So the outlook probably looks good. How they're able to execute, I think that is going to be the key. And how is the margin expansion going to happen, which relates and translates into better bottom line growth, better than what the street is expecting. That is where the re-rating will come from.